What's good, everybody? Today is August 15th. I'm about to run through the entire price action from today, looking at the trade that I took that ended up getting break even stopped out, and then we'll also look at everything that we could analyze in price today and why this model and the exact way the price moved today were just so efficient in textbook. So without further ado, let's just hop straight into it. All right, so hopping on the charts, let's just start with some top down, right? So ever since yesterday, putting this low within this daily fair value gap, we've just been slowly grinding to the upside on the 5-minute chart, maybe 15-minute chart, be a little clearer for y'all. Look, perfect generated liquidity, perfect grind to the upside to go ahead and take this high over here. So now we have internal buy side swept on a bigger time frame. So let's zoom out to the 4-hour and you can look exactly what I'm talking about. Right here, we see internal buy side swept. Now, when we're at this point, we can definitely expect to see some kind of rejection, maybe a push lower, definitely see a push lower, at least to this low down here, right? So zooming in, I'm just waiting for that confirmation to appear, right? So this sweep up here ends up happening at about like, bro, what is that? 12, 8, something like that, right? During Asia session, this happens, right? So I'm not on the charts. I don't care about any of this, right? So what I'm waiting for is New York Open. So New York Opens right here at 9:30. And if you look at this point, what we'd already done, 9:30, we'd already started our market maker sell curve, right? So look at this model here, right? So we sweep buy side to the left of us. We end up placing in the entire buy curve overnight. So let's quickly draw that in right here. We tap into for value gap, place in the buy curve right here, looking something like this, right? So we have buy curve up to this high. Now what we're looking to see is sell curve on the opposite direction down to this low. And the reason that it's so textbook is because what we need to see for the model is I can draw this exact same pattern out 1,000 times, right? And you're going to see the entry that I took is literally this exactly on a 1-minute time frame. So if we look, generated liquidity all to the side. There is no major imbalances, anything resting in this leg that is going to stop price from just dumping to its objective. And that's why we saw 2 candlesticks move more than the entire day yesterday. That's just literally how price works. Once price aligns with time, once it sets itself up a trap, it'll then go and use that trap, run it, right? Price aligns then with time, New York Open, and we see an efficient move to the downside. So at this point, we see generated liquidity. We saw our displacement back in the range. So look, outsized move to displace in the range, slow rebounds higher into fair value gaps. Then we look for internal sweep and then push low, right? So what do we end up seeing on open? And let's also take a look at NQ, because at this point, looking at NQ is a little bit of an extra move because we have an SMT put in right here. So I'll quickly draw this in on ES. If we look at NQ over here, we have an SMT. We have 2 SMTs put in. We have one here from this high all the way to this low, and then we have the same thing right here. So I mean, kind of as 1 SMT, 2 SMT. Definitely NQ is much weaker than ES, right? So that's why we want to be looking and comparing these two to find out, is this the best one to trade, like all that kind of stuff, right? So if we look at 9:30, we're at the same exact point, just on this smaller model right here. And the generated liquidity looks even more stacked right here. If we look, there's 1, 2, 3, like these are perfectly like stacked lows. Like this is insane to see in the market, right? When you see this, we're so confident it's gonna get taken out. And that's why when the morning literally opens, it just dumps straight through it all, right? So on open, what ends up happening? Let's quickly mark out some external draw real quick. So this level right here taps us back into a daily fair value gap again. So looking at this level right here, on open, we just do a little tiny bit of manipulation at the highs and then we straight dip, right? 9:30 at 9:30 open, we just completely dip. There's really no opportunity for any kind of anything, right? We just completely dip and we don't see any remorse at all until we move lower to this level. Now, I bet you there definitely was some kind of second trade here. I'm wondering if we had an SMT here. So let's quickly zoom into the 1 minute on ES. So looking at that level, I know we didn't end up having an SMT on this high. If we would have had an SMT within this value gap, this definitely could have been a like 15-second, 5-second kind of model to the downside. But in my opinion, the 5 seconds never good to trade, right? So after this, what do we end up seeing? We end up seeing this external draw get taken, and ES doesn't take that external draw, right? So now I'm very cautious to take a short. So let's look at why I ended up deciding a short was a good idea. Well, I tell you guys repeatedly, you have to react to the market. You cannot predict it. So when I see that sweep get put in, right? So let's quickly mark that out. SMT get put in, right? At this low right here. SMT gets put in, and now I'm cautious about shorts. I need to react to the market, right? So I need to understand, what would I need to see to show me that price is confidently switching direction? Well, I need to probably zoom out a little bit and see some inversion of bigger time frame order flow, right? So if I was going to take a 5-minute, or if I was going to look for some kind of short right now, or maybe even if I was going to look for a long right now, let's say, I would want to see this entire leg of order flow all throughout here get inversed. So this entire leg right here, I don't want to see this value gap get inversed, and I don't want to see this level right here, which becomes change of the state to the upside, get closed above, right? And once I see that, we can definitely look to take a long up to these highs, right? However, we don't see that, right? And we see this 5-minute fair value gap just hold. If we look, there's most likely some kind of 15-minute fair value gap too that just held even cleaner. Let's check that out. Yeah, 15-minute fair value gap. Look, price grinds to the upside until this 15-minute candle closes. Right when that happens, 1 minute taps into it. Literally one tap and then moves lower. That shows me that this was the area price wanted to seek, right? So look, price set itself up. At this point, it tapped into the 5-minute fair gap here. There's no movement until it sets itself up further to tap into the 15-minute fair value gap. It aligns, price now aligned with time in that 15-minute fair value gap. And then right there is where we see our displacement, right? So look at this model. We see displacement right here. And I'm like, okay, I see price acting efficient. We just got out of macro time. However, macro was mostly an accumulation. If we look 950 right here, we slow down and we accumulate right here. We accumulate price action. That's the area that macros can be manipulation, accumulation, distribution, right? AMD, they can be any part of that entire cycle, right? So when I see a macro like this that is strictly accumulation, I can expect to see manipulation and distribution after that. So when I see this, I immediately start saying, all right, what am I going to trade? I see this happen on NQ and ES. Why did I end up taking out an ES and not an NQ? So if we check this out, same exact thing happens, right? We see buy side get taken. This was the SMT, so this was the opposite side of the SMT. So let's quickly just mark this out, something like this to give you guys an idea. Then I see the exact same thing. We come up, I believe we even made an SMT, right? So yeah, that's another thing. We made an SMT out this 944 high. So one of these right here, SMT made. So we have an SMT, we're within a fair value gap. We're looking really good to see a short play out because now time and price are aligned and price is moving efficiently, right? So I'm just looking to enter, right? Why am I looking to look and enter on ES and not NQ? Look at the pattern recognition here. Do we know the market maker model looks something like this, where we see tap into an area, right? And we start seeing slow grind until we tap into the area that we want to tap into, manipulate, then we see fast displacement through. Now tell me, does this model right here that I just showed, does this look more like, does this really match? Or if it was inversed, I'm not sure I can do that on TradingView, but does the speed on this side, this does not match this, right? It looks more like this side, right? So when I see price move incredibly quickly, leaving imbalances in the leg, that's not something I want to try to trade through because that's an object towards price dumping. So that's why if you look, NQ moved so slow to the downside because it had all these objects, right? I want to see something where it's putting in a ton of stacked lows, stacked low, then we manipulate, then we go to take our trade, right? That's what I want to see play out. And if I don't see anything like that, like if I see this pattern, I have lost trades enough times trying to trade something like this where at that point I just don't trade it, right? Because I know that there's still a possibility it plays out, but I'm not looking to trade it because my win rate is so much lower with that. And just to give you guys some numbers, I believe it was something like win rate for a month. One of my months data tracked, win rate was something around 70%. And then when I had trades that didn't have generated liquidity, my win rate was something like 33%, while my win rate on other trades was something like 88, 90%. So by being able to understand that and taking out the good and just leaving what's good, or taking out the bad and just leaving what's good, we purify our win rate, our trades, everything, right? And we just take more consistent, less trades, more beauty trades, right? That's what we want to be doing. So looking at this model, that's the exact reason I didn't trade this, and instead I looked on ES, right? Where ES got a ton more displacement, we had a ton more of really everything we want to see for an efficient trade play out. However, it was still a little bit slow, right? So no biggie on that. After we see the displacement, place in the order right here, take profit at this level. Now you could have taken profit here if you wanted to go for a 1-to-1. I don't think that's bad, but understand that if you go to a second chart, this is going to be its own low, and because of that, and this big difference between these two, this is an area that you could definitely look to take profits just because of that small difference. I ended up placing this trade in, leaving it for this low, and after seeing this huge move to the upside that taps me in, because I placed my order about here, get tapped in by this huge move, I'm looking to go break even soon, because when I see this displacement back in the range, and when I see NQ tapping into bullish order flow to continue higher, I'm expecting this most likely to stop me out, right? So when I see price, I'm already accepting my risk. That's why I didn't close the position or close it early once we got to this point, something like that, right? Once I see price invalidate or inverse that for value gap, I go, okay, stop to break even. Stop to break even, get stopped out, price moves in the direction. Later in the day, around 11:18, we came ahead and tapped that level again and then moved. So yeah, super interesting to look at how price moved and why this model was so good. So let's zoom back out again, right? Let's look, why does this model make sense to trade this internal model and then leave it for runners down to this low, maybe some of these lows down here, right? Something like that, maybe even this low if you're confident in that. Why does that make sense? Because it's in line with the higher time frame. If you look right here, this is telling me confidently that we should go low, right? So when I see this point and I see a small retracement back, I'm like, all right, yeah, I'm confident that we should go ahead and go lower, right? So that's why I'm confident trading that, because I'm just trading the small move of the bigger model. The bigger model's already validated it. It's told me 99% overwhelmingly that we're gonna go ahead and take some kind of lows down here, right? So when we don't take the low, we place in relative equal lows, we pull back to a fair value gap, that's an opportunity for me to take an internal model trade. And that's why this way of trading in this trading system is just so high probability, right? So if we look, we ended up taking this low right here. This was the last low that we took before rocketing off. I want to quickly check out how standard deviation would have fared us this day if we did end up playing it. I really don't think the manipulation leg was the cleanest. I think we had something, maybe this would probably be my manipulation leg. But once again, if it's not clear, it's not really going to be the best idea to mark it out, right? So, I mean, -1 is aligned right there for this bigger time frame manipulation leg. In my opinion, it wasn't really clear, and because of that, there's no need or reason or anything really to mark it out. If it's not clear, it's not really a true manipulation then. And yeah, but overall, I think this trade was super great. Definitely got to look at trade management though, because I think when you have a profitable system, it's not about just taking trades off early because you're scared of it, or because you're looking at it like, I don't want to lose money in case it reverses. Like, no, you know your system's profitable. You shouldn't be worried about money at all in the slightest at all. If it's gonna play out over time, which you know it will, then it is 100% fine to leave your position on when market's pulling back. Not scared that it's going to hit your take profit, not even caring, or not scared it's going to hit your stop loss, but not even caring that what the market can do. It can go ahead and stop me out, and I don't care at all. My ego won't change because I know my system's profitable, and it's not me that's trading, it's my system, bro. I'm simply just an executor of my system. It's not me trading anything. I'm not doing anything. I'm simply just executing my system. I think that's where a lot of traders get caught up, because they think that their trades and their P&L and their trade performance is a complete reflection of them. Like, no, it's just a reflection of your inputs, right? So if you're going to do dumb, stupid inputs, you're going to get stupid, horrible results that aren't your high level of excellence as a person, right? So align your inputs with your high level of standards that you have in every other area of your life, and you'll see trading click. Align your standards, right? So only take one trade a day, only take really good setups, and you will just see consistency play out. I mean, it's really, there's nothing simpler to it than that, right? And I mean, yeah, so this is the trade of the day. I think it was super solid. I wish I would have left it on, of course. The model's still there. There's no reason to really take it off. But I mean, at the end of the day, it is what it is. I think it was a perfectly fine trade to take. Good break-even trade. Nothing really crazy about it. So without further ado, I'm going to let you guys go. If you have any kind of questions, anything to ask me about, worry about, anything that you're confused about in any of these videos, just let me know. Just drop a comment and I'll be the first to answer it. So thank you boys for listening. I hope you guys learned something. And without further ado, I'm going to let you boys go. So peace out.